How to invest in commodities without a futures account. Most people think they need a futures account to profit from gold, oil, and wheat. They're wrong. And that misconception is costing everyday investors thousands in returns. Today I'm showing you 4 ways to invest in commodities starting with literally zero experience. And you can do it from your phone right now. Let's go. Part 1. Why commodities matter to your portfolio. First, the truth about commodities. When inflation hits, and it will, stocks and bonds get destroyed. But commodities? They actually thrive. Gold went up 30% in 2023 while the bond market got hammered. That's because commodities move differently than everything else in your portfolio. A diversified investor needs exposure. But here's what stops people. Futures trading requires massive accounts, crazy leverage, and honestly, you'll probably lose money if you're new. So we're skipping that entirely. The methods I'm about to show you are boring, and that's exactly why they work. These are the same strategies that money managers use. They're just not as flashy to talk about. Part 2. The 4 methods. Method 1. Commodity ETFs. This is the easiest entry point. An ETF is basically a fund you buy like a stock. It holds the commodity for you. Take Vanguard's VDE. This is an energy ETF that holds oil companies. You can buy it in a Roth IRA. Why is that important? Because you get tax-free growth on your commodity gains. That's free money from the government. Last year, someone with $5,000 in VDE made around $800 in gains. Tax-free. You literally cannot do that with futures. Or if you want direct commodity exposure. There's DBC. This tracks crude oil, natural gas, and agriculture prices. One share costs about $15. You can own it in any brokerage. Fidelity, Robinhood, wherever you already have an account. The downside? ETFs charge fees, usually between 0.5 and 1.5% annually. That's nothing compared to the peace of mind and liquidity you get. Method 2. Commodity mutual funds. If you already have a 401k, and you should, your employer probably offers a commodity fund inside it. Mine has the American Fund's American Exploration Fund. It invests in gold, silver, and mining companies. I put $200 a month into it through payroll deduction. It's invisible. It happens before I even see my paycheck. Here's the psychological win. You can't spend money you never see. So leverage your 401k's automatic contributions to build a commodity position quietly over years. Check your plan documents. Most plans have this option buried in there. Method 3. Direct stock ownership in commodity producers. This is what Warren Buffett does. He doesn't buy oil futures. He bought Chevron stock. When you own a mining company or oil producer, you own the business itself. You get dividends. You get upside if the commodity price spikes. And you get downside protection because the company can adjust operations. Companies like Newmont Mining, Barrick Gold, and Exxon Mobil are boring. Perfect. Boring is where money is made. You can buy one share for $90 to $130. Add it to your Roth IRA. Set dividend reinvestment on. Forget about it for 30 years. This is how regular people build wealth. Method 4. Commodity mutual funds inside your Roth IRA. This is the nuclear option for tax efficiency. Open a Roth IRA. If you don't have one, do this today. And look for a precious metals fund. Vanguard's precious metals fund ticker is VGPMX. Minimum investment is $3,000. But if you're serious, that's reasonable. Every dollar that fund makes is completely tax-free forever. You could turn $3,000 into $30,000 and owe zero in taxes. That's not hyperbole. That's the actual law. A guy named Marcus did exactly this in 2020. He put $3,000 in a precious metals fund in his Roth IRA. It's now worth $7,800. He owes tax on zero of that gain. Part 3. How to start today. Pick one method. Literally one. Don't overthink this. If you have less than $5,000, start with commodity ETFs. Open Robinhood or Fidelity. It takes 10 minutes. And buy $50 of DBC. That's it. You're a commodity investor now. If you have a 401k, add the commodity fund to your next contribution. $100 a month minimum. If you want the tax-free approach, open a Roth IRA and add a precious metals fund. You don't need fancy knowledge. You don't need a complex strategy. Commodities are insurance. Boring insurance. And boring insurance is why some people never panic sell during crashes. Start small. Stay consistent. In 10 years you'll have serious wealth that most people never build. Call to action. Drop a comment telling me which method you're picking. I want to see you take action. And hit subscribe because next week I'm showing you how to use your Roth IRA as a real estate down payment fund. That's a complete game changer. See you then.